To look now at the challenges ahead for Bank of America and Mr. Moynihan with Brian Charles of RW Pressprich. Brian, by the way, is a Bloomberg best analyst when it comes to B of A. That means he's one of the most accurate in the world. Also joining us is Bloomberg View columnist and contributing editor Bill Cohan. Bill, by the way, spent almost 2 decades on Wall Street and has written several books, including most recently Money and Power, How Goldman Sachs Came to Rule the World. So, guys, 2 perfect individuals to talk to about B of A. Brian, I'm going to kick it off with you. I mean, is Bank of America coming undone here?
I don't think they're coming undone. They're still dealing with the mortgage issue that's in front of them regarding the private label mortgages, GSE mortgages, generally countrywide mortgages. And it's probably going to take them a few more quarters to get this behind them. That's my calculation,
Just
about 3 quarters.
Another 3 quarters. Bill, what do you think when it comes to their mortgage exposure? It seems like just when we think we have an understanding of B of A's exposure, their mortgage exposure, something new kind of hits the fan here. What do you think?
Well, I think, Carol, that it's clear that the countrywide acquisition was really not a very good acquisition at all. And unfortunately, Brian Moynihan is the one that has to clean it up. And so I feel very sorry for him when he's faced with this very difficult situation, which only seems to get worse and worse. It seems like a bit of a black hole. And, I think their stock price decline just reflects the investor worry about this.
What about Bill? What about Merrill? I mean, is it a situation that he can turn around? Is their army of brokers worth something to B of A, or is Mother Merrill still mobile? Can they pass it back on?
Well, look, I think Mother Merrill is a very valuable asset. I spent more than 2 years working there, Matt, once upon a time. It's an incredibly valuable franchise. I think it has probably been responsible for keeping the firm afloat in the last 2 years. I mean, not literally afloat, but I mean, has really helped its earnings and its earnings potential in the last couple of years. And I think that this is what they need to, the combination of B of A's corporate lending and corporate client base and Merrill's the securities business, I think, and plus the brokers, is a very valuable franchise. That if that's going to be the new BAC, as Brian Moynihan likes to refer to it, that is a good thing. They need to jettison Countrywide and get out and do the things they've been doing in terms of selling assets as rapidly as possible.
Brian Charles, do you agree that that's a good thing, that combination?
Yeah, I do. I think Merrill's actually been a bright spot for the overall company pretty much since the acquisition. There was a lot of cloudiness surrounding it when it first closed, but while B of A itself was dealing with its credit card exposure in 2009, as that has come down, Merrill started rebounding. And in 2010, it's been really mortgages that didn't have much to do with Merrill at all.
The new BAC, Brian, involves, at least as far as we know now, 6,000 job cuts this year, 2,500 that were already dealt with, and another 3,500 announced today. Do you think they need to make more than that? Because it's only, I think, like 2% of their overall employment.
Yeah, I think over time that we're going to see more job cuts coming down. And I kind of back into that, just given the overall economic environment that B of A is working in right now, particularly this rate curve environment. I have a feeling the net interest margin is going to come down. And if they really hit their 55 to 65% efficiency ratio target, they're going to have to cut more. Certainly more expenses, and I think a lot of that's going to come with headcount.
But they're not alone, Brian, are they?
No,
I mean, we're
not.
seeing it kind of across Wall Street.
That's right.
And that's going to continue.
I think so. In fact, my opinion is that the overall industry is going through a secular contraction. So regardless of the economic environment, I think it will be shrinking over time.
Bill, you've studied Wall Street. You've worked on Wall Street. I mean, what do you think is going to be the next 10, 20 years for Wall Street?
I think Brian is absolutely right. I think we're going to see, look, Carol, the largest expense on Wall Street is compensation. Mm-hmm. What better way to improve profitability? The easiest way is to cut compensation. I see compensation across the board coming down. I see these firms, by and large, shrinking. I mean, B of A is a huge company in terms of numbers, so it must shrink. And I think we're going to see a return to what Wall Street used to be best at, which was raising capital for their clients anywhere they needed, debt and equity, providing M&A advice, providing investment advice, and these trading businesses that got them into so much trouble are going to be downsized.
Hey, Bill, we see kind of a drip feed here of the headcount cut. It's maybe more understandable than a drip feed of the real size of the mortgage problems, right? Because you want to sort of coddle people a little bit who are going to lose their jobs. But why not come out? Why doesn't Brian Moynihan say, look, this is the real value of what we're holding. This is what we have to write off and just get it done with. It's not like his original problem, right? He inherited this from Ken Lewis.
Right, absolutely. He inherited this from Ken Lewis. It's his problem to deal with. I mean, I suspect, Matt, I mean, I'm not inside his head, but I suspect a lot of it is litigation-oriented. They have to be very careful what they say. They've already got this one settlement that they've managed to negotiate that they're trying to get done. I mean, I don't think, saying more and more exposure than they've already said is going to lead to more shareholder losses, which I'm sure they're going to have a rash of anyway, given their stock performance. I think they just have to be very, very careful. And maybe they're hoping that, these mortgages will rebound and create value again for them.
Brian, is that going to happen?
I'm not expecting it in the near term. We are navigating a slowing economy right now. So I think Bill's right. The litigation risk is the main component of their mortgage-related risk right now, and that's really hard to quantify.
You bring up a good point. I mean, everybody's bringing down, it seems like, their growth estimates here on Wall Street. I mean, this is already a $7 stock. I mean, is there a point that we see this get down to a $2 stock, $3 stock in your view, especially as the economy slows and it becomes even tougher, not just for all the financials, but certainly for Bank of America that has such a high mortgage exposure? I
don't think that's going to be the case, because when I look at B of A stock right now, I think it is being priced at the $7 range because of mortgages. Now, if you could take the mortgage exposure completely off of the balance sheet, they would be facing the same challenges that the rest of the street is facing. But I think they would probably be talking about, a $15 or $16 stock right now.
So about double from where they are today.
I think it's potentially. Yeah.
I wonder why. I mean, you say, Brian, you have this as a speculative buy. You see some upside here that you don't see at other banks. What is that?
Well, it's essentially the mortgage exposure for B of A is unique in terms of its scope. And if B of A can get on the other side of this, I think that you can look at them the same way they're looking at the other banks and look at the same challenges that they're facing regarding the net interest margin, trading revenues, and operating in this overall economic environment. But if that's the case, I still think it's in this rate or in this environment right now, it's close to a $2 stock EPS. And of course, as of a few weeks ago, there was, multiple there was like 10 times. Now it's like 7 times. That's, it's still a $14 stock, and that is looking at B of A away from its potential mortgage exposure.
So essentially, it could be a great, great buy, but we'll have to wait and see.
That's right.
Going to leave it there. Brian, thank you so much. Brian Charles of RW Pressprich, and also Bill Cohan joining us on the phone to talk about Bank of America.